Manoj Rane, the Managing Director, Sionic Advisors, now joining us. Manoj, the rupee, the best performing emerging currency. Would you say this is all domestic factors at large? There are, of course, maybe some global events at play. You've seen a Donald Trump interview, for example, being recorded and play out overnight with respect to the trade war, a whole host of other global events. But is it largely to do with the domestic trigger of the exit poll, the strong opening that we saw for the Indian currency today?
Yes, I think indeed it's got a lot to do with local developments. The exit polls, across the board seem to signify that at least we will have a, certainty as far as government formation is concerned. I think what markets really hate is uncertainty. And the fact that, most exit polls at least indicate a government on one side implies that it may be, however it is for the politic at large, at least for markets, stability is something which is paramount. And, I think there had been it had been quite shaky the last week, principally because that stability, there were a lot of question marks. So I think the currency has got a lot to do with local factors, as indeed you can see stocks have played out. We still don't have numbers for FX, portfolio investors, but I guess there would be substantial portfolio investor interest and investment today as well, which would have had a fairly significant part in the currency appreciating to the extent it did.
Manoj, but what is it that has the Mint Street so enthused? Is it also because you have a new RBI governor who seems close to the political dispensation currently at the center, expected to come back, and therefore the two having a good working relationship? The governor that has taken certain steps in the recent past to give liquidity, for example, a booster shot. Is it primarily to do with that the stability, the combo is what is liked by the markets?
I'm not so sure of that because, if you look at bonds, the 10-year has rallied just about 5-6 basis points. So, it's not that you've seen the extent of, gains that you've seen in equities to that extent in bonds as well. I do think that whichever government comes to power, they're unfortunately, whether we like it or not, both sides of the political divide have been quite populist in their pronouncements as far as either their, election manifestos are concerned or, whatever they have done in terms of action. This has played a fairly negative part as far as the fiscal deficit is concerned, and I think going forward you are going to see more populism than, revolutionary positive changes as far as the economy is concerned, or, a very strong economic action. So my guess is that given the fact that populism is likely to be here to stay, whichever government comes to power, the fiscal will remain under pressure as it has in the past. There has been some concern on inflation as well, particularly on the food side, which might also play its part. See, the other issue which has been also, holding up bond yields has been, the short-term liquidity squeeze. Unless that changes substantially and, things like the FX swap window or bond buybacks are more or less temporary measures, but, the liquidity situation has to see a signal change in that instead of the system borrowing from Reserve Bank of India, you have to see the system lending to Reserve Bank of India. It is only then that monetary transmission happens very strongly, and you will see interest rates come down and growth come back and, maybe hopefully employment come back as well. So I think I'm not convinced entirely that, these exit polls and whatever happens on, May 23rd is going to lead to, much better fiscal and economic conditions, which in turn will lead to a sustainable rally on, all assets. I'm not convinced of that. I think this has got very much to do with election results, and hence it may not sustain post results are out, whatever the ultimate electoral mandate.
Right, but that's how it always starts. Like the first rally, nobody believes, nobody wants to believe it. The second one is something where you get the real test whether how they are coming on of the calls that they are taking. That's how it always starts. At least there will be that hope.
For sure, I think there are two parts to hope. The first part, I think, there was a lot of concern that you might have a fractured mandate and a very large multi-party coalition which may not last its term. I think so that hope is kind of crystallized in the form of the exit poll. So that is one part. The second part is what actually happens after whoever gets the mandate takes over the seat. See, we've found over the last several decades that whichever party comes to power, even if it is a fractured coalition, to use my own term, we've always seen that economically, they have always moved in one direction. Having said that, the last year or so, there has been concern, and everyone has noted it, that we have started moving again to the old socialist, populist kind of economic policies, be it the articulated Nyay or, even what the NDA has done over the last couple of years. So, what it means is that it is moving away a bit from, free market economics and, incentivizing production, etc. There have also been, lots of issues for large employment sectors like construction, manufacturing, etc. So I think it really, what the existing government, if it comes back, needs to really look at and address is, we were doing this wrong. Maybe we need to, rectify that. Any other party also has to look at this part as well. And that would lead to a sustainable rally, is what I'm trying to say.
Right, Manoj. Thanks so much for taking our time. It's always good perspective from you.